we go. It's another stock market stream. I'll tell you, trading has been really weird during the holiday season here, but there is some breaking news. House hack for December is at roughly 5.3 millis in investments. So shout out to all of those of you making your investments before the fundraise ends tonight. So we're actually like on the inside, like we could not be more grateful that this fundraise is ending for a few reasons. You know, one, obviously it's a lot of work, but two, it's kind of nice to know that if we're gonna grow the AI side, there are fewer stocks outstanding, and then it's easier to grow earnings per share. Which is different when obviously your one goal is capital acquisition. If your only goal is capital acquisition, you can buy that capital at a discount. Well, then you issue shares and you create more discounted capital. Everybody sort of wins through scale. But on the AI play side, you kind of want fewer shares outstanding. So it's a little tug and pull, but very entertaining. At the same time, this morning we did bounce off of 617. Today it looks like, honestly, we're bleeding back down to 617. I don't know what's going on. This market has been very bizarre, mostly because of my guess is just the holidays. There are way fewer people trading than usual. But, you know, this morning we got, which we know were lagging numbers, but we got unemployment claim numbers that came in lower than expected, continuing claims lower than expected. Everything should have broadly been optimistic for you know, continuing on the move up on the Qs, but nope. Market doesn't care. Might be end of the year profit taking or who knows, but looks like we're going for a 617 test. We're within 20 cents of it right now. So kind of crazy. But yeah, you've got some wild activity in the market right now. Now, I do think once we get through the January 9th jobs catalyst, if we don't fall off a cliff in January, which I don't necessarily think we will, it's bullish soft landing. Problem is, you know, we got to get there. So we still got another 9-10ish days to go until we get that data. So I'm looking forward to that. So let's go take a look and see what's going on the street. Let's go find out and we'll explore the space a little bit. We've also still got Bitcoin at a break up or break down point. I think you're going to see a $14,000 movement within the next 2 weeks in either direction, up or down. Well, we'll see. So, you've got talk about Nike. Some people are of the impression Nike is trying to create a bottom over here. It is bouncing almost perfectly off my 57.35 line, though we did end up losing that earlier this year during Liberation. It's been a rough ride for Nike. Taking a peek at Adobe. Adobe's also trying to show that kind of like Nike bottoming, but not sure if we're actually going to get it. Okay, then let's see here. Xi Jinping touts China's AI chip wins in triumphant New Year speech. Ooh, is it already the new year in China? Let's go see. Time in China. Oh, it's about to be the new year in China. In about 40 minutes to go until we hit the new year in China. That's cool. Okay. So, let's see here. Let's see. Stranger Things finale. Finland takes control of ship suspected of undersea cable damage. Ooh. Iran clashes. Quiet also. You know, little in the way of news again. Incident that prompted Trump to ban Epstein from Trump's Mar-a-Lago. Mar-a-Lago sent an 18-year-old spa worker on a house call to Jeffrey Epstein in 2003. She complained to her bosses that Epstein pressured her for sex. Jeffrey Epstein wasn't a frequent visitor to Donald Trump's Mar-a-Lago club in the late 90s and 2000s. Club was also sending spa employees, usually young women, to Epstein's nearby mansions for spa services. Oh no. The house calls went on for years, even as spa employees warned about Epstein, who was known among staff for being sexually suggestive and exposing himself during appointments. The spa occasionally provided house calls for members. Epstein wasn't a dues-paying member of the club, but Trump told staff to treat him like one. Aha. Epstein had an account at the spa with Maxwell. That came to a halt after an 18-year-old beautician returned to the club from a house call and reported that managers had pressured her. Trump manager sent a fax relaying the employee's allegations and urged him to ban Epstein. Trump told the manager it was a good letter and to kick him out. Who knows? But very interesting. Looking at this sometimes is so, like, well, first of all, the whole thing's really disgusting, but, like, seeing this, like, all this historical stuff, all of a sudden, I guess, comes to light. It's like, why didn't we hear about this a long time ago? But anyway. Department didn't begin investigating Epstein until 2 years later. Huh. Palm Beach police. Ah, weirdo. All right. So what else? Let's see. How to end mortgage lock-in and get people moving again? Well, I mean, rates coming down, but let's see what their suggestion is. OpenAI is paying employees more than any other major tech startup in history. Oh, really? Meta's newest acquisition target got around worries over its ties to China. Silver slides. Let's see here. Let's see. Okay. Wow. All right. Quiet. Well, what do we have here? What's this mortgage lock-in? Many Americans are stuck in place. 2022 annual sales of existing homes in the U.S. have fallen by about 4.1 million. It's a low number. Usually you see like 5 to 6 million sales a year. It's kind of a low number. We'll say. The what's interesting is you've got well, let's see what they say. Cheap mortgage interest from mid-22s are keeping homeowners from trading up to accommodate blah, blah, blah. Home finance, blah, blah, blah. Okay, so the lock-in. A simple, risk-free financial transaction, however, could motivate owners to sell by allowing them to realize the value in their below-market mortgages. It can be done by creating a defeasance account at settlement to pay the remaining monthly payments on the existing mortgage. Existing due-on-sale mortgages prohibit this. Oh, basically get rid of the due-on-sale clause. Yeah, but then I don't think you're going to do that. You're not going to accomplish that because lenders, they lend to the property. And they don't want you to port your mortgage around. This is basically a mortgage portability argument. I don't see that happening. Stock-based comp at OpenAI is about 1.5 per employee. Yeah, but the problem is that's predicated on OpenAI's already insane valuation. So imagine you get in at, let's call it an $800 million valuation at OpenAI. And they're like, dude, this is worth 1.5 million. You're going to be rich, bro. And then Scam Altman, falters and the valuation, compresses to 100 mil. I mean, it's still good, but divide that by 8, it turns into $200,000. So, the problem with staking your compensation on a company's valuation that's so high is you're expecting basically artificial general intelligence to become a reality. So this is actually, in my opinion, a real big risk for people working for OpenAI. Your illiquid stock is based on a really high valuation that, what upside is there? I don't know. Especially in the face of competition from Google. I find that interesting. If I was a worker, I would not want to stake my stock comp on an already nearly $1 trillion company. What the downside is massive and the upside is nominal. You know, you could get a double at like any company. You know, especially if you get into it earlier, certainly smaller companies. But anyway, I find that very interesting. Elon Musk's XAI buys building for third supersized data centers. I don't think the buildings are that expensive, but I do think that's interesting. I wonder how much he put into it. They're still trying to get 1 million chips. Let's see. Doubling down on the strategy of building, running its own data centers. Even as they're trying to figure out how to make money. Yeah, I think Elon's on this, like, I need to kill Sam Altman, like, you know, in Sam Altman's business path. I feel like his judgment is a little clouded. So when I see these, I don't necessarily see these as, like, leading indicators. I actually see them as just sort of, like, pure risk here. Macro harder. I do like the name. Plants start running in 26. Both of them were close to a natural gas power plant that XAI is building in the area. This makes sense that you basically just plop your own power plant. So all you then have to do is you have to run the gas line to, you know, a natural gas pipeline basically to your gas power plant, and then you have your own power plant yourself essentially. Yeah. Let's see here. Somebody here says, laws for financing have changed since people got caught for having more than one primary mortgage. Well, you have to be careful with that. Because technically, you can have more than one primary mortgage. Because you only need to intend to occupy a property for a year. So technically, in 7 years, you could have 7 primary mortgages. So, we have to always be very careful about saying that something's fraud if we don't know if it's fraud. Now, you know, again, if you're signing for 2 primary mortgages within 7 weeks of each other, that doesn't look very good. You know, is one of them a second home? You know, there are always more details to figure out. It's kind of like I'd love to make a video diving into a little bit of what's going on with this Minnesota daycare fraud stuff, which people are now doing this in like Washington and Ohio, and people are going ham over, oh, it's autism centers, oh, it's daycares, oh, it's senior citizen Alzheimer's care centers. And every care center that says they're open, if they don't open the door, they're a fraud. I think that people are walking a seriously risky legal tightrope, because if you go to a business and you knock on the door and they don't open, and you go to their business at, let's say, 10 a.m., and then you go blast them as a fraud on social media, and then they go bankrupt because of that, and the business was actually legitimate, you know, maybe they go visit clients at those hours, right? Then you could potentially bankrupt that business, and the blood is essentially on your hands. So there is a massive risk, and I'm not saying there's not fraud. We know there is fraud. I'm just saying there's a massive, massive risk that people face when they say, oh, I knocked on your door and you wouldn't let me in, you're a fraud. When, you know, all the details and facts aren't known. I think there are going to be some major lawsuits in the new year. Like, a lot of these businesses probably just got multi-million-dollar settlements in potential legal victories if they're not frauds. So it's sort of like, if they're a fraud, okay, they go bankrupt, they go to jail, good, as they should. If they're not frauds, they just hit the lottery, because the amount of ammunition they have for a defamation lawsuit is massive. The more viral this stuff goes, the more these businesses can sue. So Brett says, that's obvious fraud, bro. You don't always have to take the liberal side. See, that's you know, the problem about talking about this is, you know, people who only are like, can only think on one side are like, no, you're just a libtard. No, you know, I'm honestly, I'm talking about this open and freely here because I'm conflicted, because I'm like, you know, we can't guarantee it's fraud. it might be fraud. It certainly looks suspicious. Somebody says, either way, fraud should be exposed. Well, of course, either way, fraud should be jailed, right? We know that. But somebody here says, why would a daycare not have people present when they're supposed to be there? Horrible. No. See, like, that's the problem is like, what if it's not a daycare? What if it's a child care that does aftercare, right? There's daycare and there's aftercare, right? If you show up at 10 a.m. to an aftercare facility and there are no kids because it's an aftercare facility, that's a problem, right? So now you call a child care facility at 10 a.m. a fraud because there are no kids, and all the kids show up at 3 p.m. because they get off school. Well, damn, now you take a big L because you called a business a fraud when you didn't understand what the business does. I don't know, right? I know that I don't know, right? That's my take. I know that I don't know. So I absolutely hate fraud, but I also recognize that right now it is politically popular to call everything fraud. It's sort of like, oh, USAID was fraud. No, it wasn't. You might disagree with the spending that USAID does, which is, advertising American values, right? It's really an advertising campaign. It's sort of like putting Coca-Cola logos everywhere. They put the US flag on sacks of rice so people don't starve. Maybe they're less likely to be terrorists, right? It's an advertising campaign. And so then you get, Elon and Trump that are like, well, it's a bullshit advertising campaign, cancel it. And so then you cancel the advertising campaign, and then it gets branded as, look at all this money we saved from fraud. Okay, but was it fraud, or was it just somebody's other opinion as to how to spend money for the government, right? It's the same thing with DEI. Like, I know DEI is like mega hated right now, but that was a legally authorized initiative from a prior administration. That doesn't make it illegal. That just makes it a different opinion than the current administration. So it's actually, in my opinion, very interesting when you look at this. Somebody says, oh, shut up, Kevin. See, that's like, to me, that's the problem is like, if you try to take a very human point of view and you go, okay, well, do we have all the facts and circumstances here? Then you get, people, I mean, I hate to say it, but you probably, if what I'm saying doesn't make sense and you can't even type together a rational argument, you probably have a room temperature IQ. And so maybe like think about your thoughts, right, before you lash out. Because if you think about it, I think what I've said is very rational, but I don't know how to, I don't know how to talk about that without like, 50% of America getting mad because, you get a lot of the, la, 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 it's fraud. And it's like, okay, but what if it's not? Well, what if it's not fraud? The lawsuits are going to be insane. So, like, I just want you to think about that from, like, I would say 99% of you that watch, my videos, my content, you're looking at, well, I never thought about it that way. I want you to think about this for a moment. If you, let's say you had a business, a real estate business, and you sell, real estate to people, and you're like, I'm open 8 to 5, come by my office 8 to 5 every day. And you have a plan to be there 8 to 5 every day, and you're there 90% of the time. You're there, but then you get a listing appointment, and you're like, "Oh man, I'm closing up shop. I'm out of here." And then at 3 p.m., somebody knocks on the door. Aha! You're a fraud. And then you go bankrupt because somebody slandered you on the internet, and you were legitimately working in your business. Shit, you actually just probably won a lawsuit lottery. Somebody says, I not understand free speech equals allowed to say dumb things. Right. I mean, I know you're being facetious. The thing is, your right to free speech ends at the point of lying or being negligent about people's livelihoods, right? So, like, if you say, and you have to be careful, like, politicians don't have this benefit because they're considered, what's it called, public figures. So you can actually say whatever you want about a politician, And it's a lot harder to say that a politician was defamed because they're considered a public figure. But a private person is very protected. So if you know something is false, like let's say you know for sure your neighbor is not a kiddly diddler, you know it for sure, but you call them a kitty diddler on the internet and you get them fired from their job, you're screwed. The legal liability is all in your hands. It's very interesting. So when somebody's not a public figure, there are serious free speech limitations. Yeah. So I think that's very interesting. So I'm really curious at which point Nick was just going in and accusing people of fraud without asking people for business information. Well, I think another complexity, and I don't know this, but I think another complexity is a lot of these daycare facilities, they have very long waiting lists because they're subsidized. So you don't actually get into these daycare centers by just knocking on the door, shoving a camera in someone's face. I don't know this, but I believe that there are long waiting lists to get in because they're so subsidized. And that's what happens when government gets involved, right? Like, I'm a big fan of get rid of all the government subsidies anyway and just let the free market handle it. That's my impression. I don't think you should have any of it anyway. And I think the market, look at that, perfect bounce on 617. I think the market is really good at evaluating where money should go. I think you should get government money out of it, and then you don't have a problem. So someone here says, my YMCA daycare has a wait list about 40 long. Right. Yeah, I mean, and if you went to that YMCA daycare and shoved a camera in their face and said, take my son Joey, otherwise you're a fraud, it probably doesn't go over well. So, go to Minnesota, open a daycare. No. All I want to do is focus on Househack and our AI. That's all I care about. We did, what did we do yesterday? This month, we're at 5.3 million raised. And we did a demo of the AI app yesterday on the channel if you haven't seen it yet. Remember, we're going to raise the price substantially for the Reinvest AI because it releases today. So if you want to get in before we raise the price, you could get in right here, get the Reinvest lifetime offer. We're going to raise the price on this a lot. And then eventually the lifetime option will just go away. But it's very exciting for us. That's what I care about. I don't know. You're right. Sony says, you're right. There's long wait lists, just like low income housing. You can't just walk up and say, give me an apartment today. Yeah. I think that's the larger issue. Somebody says you have to admit they seem shady. Well, we have to be careful with that because everything in an impoverished area looks shady, right? Like when you go into a poor neighborhood and there are bars on the windows and people don't answer the door because they think, you're a criminal or whatever, because people see gunshots on their streets. Of course that's going to look shady to us. I mean, look at us. We're 2,000-3,000 people or whatever watching the stock market. We're so freaking privileged sitting here watching the stock market. I'm not saying that we all are. I'm just saying, it's a different world. So, of course, a poor neighborhood looks shady. Everything looks shady, right? So, I don't know. Yeah, we know there has been fraud. I'm not saying there isn't fraud. See, this is why I don't even want to talk about this topic. I'm not saying there's not fraud. This is I think this is people listen to half of what I say, and I think it's really just some of the really I don't know, check your IQ or something if you can't put together and formulate a proper sentence. But We know there has been fraud in the past. We also know that there is fraud today. I'm just simply saying, if you say every business is a fraud because they didn't open the door, because they have a waiting list or they have different hours or whatever, you're opening yourself up to massive legal liability. And it's very, very risky. Very risky. So that's all. All right, so let's keep going here. So let's see here. Okay. Let's see here. Okay, so we've got, let's go back to the information. Brookfield to start cloud business. Let's see here. Fix private markets before small investors are invited in. What's wrong with private markets? What is this? What's wrong over here? Wall Street's latest push into private markets may give individual investors their 401k accounts access to shares of unicorns like SpaceX, OpenAI. It may allow them to add billions in additional dollars to liquidity trap, currently plaguing more sophisticated investors. Okay. Private markets have suffered illiquidity, not a lack of capital. Well, yeah, I mean, that's the nature of that. I mean, like, when we invested into SpaceX or we invested into, you know, Apptronic, like, we knew going in these would be very, you know, very illiquid investments. Investors in the same 12 months got back $307 billion from initial public offerings. Okay, so at this rate, investors, this assumes that liquidity is even to distribute secondary purchases, shares of private companies, blah, blah, blah. So it sounds to me like they're basically complaining. They're making this article saying the problem with private markets is illiquidity, but we already know that. We already know that. Like, that's, why is that a surprise? Let everyday investors in. He observed the minimum size for a company to go public has spiked to a market cap of 4 to 5 billion from $1 billion a decade ago. Some of the smallest IPOs this year were among the worst performers, such as crypto exchange Gemini or Wealthfront. Was that true? Let's take a look at this. Let's look at Gemini. Kevin, is House Hack closing to future investors? Yes. I don't know anything about MDLN. MDLN. Yeah. Medline. Yeah, I'm really excited about closing our offering because, I mean, it's gone really, oh wow, Gemini's done terrible. It's gone really well for us. You know, what did I say we have now? I think this is December so far as 5.3 million. And we're really grateful, but we're also very excited to end this because it's exhausting. It's we just want to focus on our AI. That's what we want. Okay, let me make sure this is good. Hold on a sec. Okay, good. But yeah, so we're ending that fundraise. But anyway, yeah, look at this. The information's right. Gemini, wow. Look at Gemini's fall. So they IPO'd this year, actually. $45. 9.85 divided by 45.89. They've come down almost 79%. Wow. Somebody says, I pulled out of the market as soon as I saw the SPY could not pass the double top. Oh, I guess it depends how you're looking at it, but all right, that's interesting. Yeah, I mean, we haven't had somewhat of a double like that in a while, huh? All right, I can see that. Okay, so somebody says, we already talked about $500 billion that just got printed in repo yet. Let me see. Okay, let's see here. Well, I don't see $500 billion, but wow, yeah, there's definitely a year-end pop over here. Look at this. Holy smokes. This is $74 billion in the repo facility. Wow. Very interesting. Somebody says Gemini's financials look awful. What are their financials? Let's go take a look at that. Somebody says, I think there's a noticeable difference when people talk about possible right fraud, Trump, and possible left fraud, like Minnesota fraud, inconsistencies that people point out. And there's, you know, I don't know. I always look and I say, just do the absolute best thing that you can do and don't worry about other people. It's not my job. Earnings report. So, you know, just wake up every day, one foot in front of the other, and try to do hard work and do your best that you can. Gemini Space Station Inc. That's not right. No, I don't want Space Station. I want Gemini. Is that what they call it? No, this is their website. Gemini Space Station Incorporated? What? Is that what they call themselves? Gemini Space Station Inc.? That can't be right. No, yeah, purchase of crypto, disposal of crypto, operating activities. They sold crypto. That's interesting. They sold crypto. I've got negative cash. Yeah, negative cash flow. I've got, here's the money from when they went public. Max says, I received my convertible bonds last night. Oh, that's great. Good for you. Yeah, our broker dealer, I feel really bad for him because, well, like the staff over there, because they're so overwhelmed with people that have like pending applications because they have to do the KYC and all that stuff. Like, I don't think the guy's been able to enjoy the holidays because he's just like hours every day trying to process people's KYC and their applications to invest. Feel bad. The guy's got to raise his fee. But anyway, total revs. So these are revs. Includes related party amounts of revenue, related party transactions, salaries and comps, operating loss. And they're losing a lot of money. I mean, these numbers don't look good. Sales and marketing exploded. A lot of this, yeah, I mean, they took a cash out on IPO, basically. Yeah, the numbers don't look good. And this is just a quick glance at Gemini. I don't want to spend too much time on this. But you're right. Cash and cash equivalents, customer funds, you can wipe those out. Related party loans, third party. Like, there's some confusing stuff going on here. Yeah, no. So it says, do course members get a better discount for Reinvest AI? You could, if you go to the last alpha report, there's a course member coupon code in there. So just look at the last course member coupon code. Sonny says, I just took my investment from 50 to 75K. Did you hit 5 mil? Yeah, we're at like 5.3 right now. And today's obviously the last day. But yeah, I mean, shout out to the people joining the Reinvest AI. Honestly, like right now, the Reinvest AI signups are just like crushing the alpha membership signups. Like I'll read it. I'll read you the last like 10 of them here. So this is all within the last few hours or whatever. Robert, Reinvest AI. Reed, Reinvest AI. Shay, Meet Kevin membership. Fernando, Reinvest AI. Brian, Reinvest AI. Shimar, Reinvest AI. Ed, Reinvest AI. Russell, Reinvest AI. Paul, Reinvest AI. Matthew, Reinvest AI. Will, Reinvest AI. Matthias, Reinvest AI. Kakper, Reinvest AI. Christopher, Reinvest AI. Those are just the most recent ones here. So I think I'm like, what is that, like 12 to 1 right now? It's crazy. And the alpha report's still great, but it's just getting drowned out right now by sales of the Reinvest AI. So, yeah, that's crazy. I mean, I get it. It's a new product, but yeah, Winklevoss Company. Yep. Sunny Sister credit card is pretty dope though. Yeah. Well, they're losing money to do it. Yeah, Reinvest is 20K min. So somebody writes, I would be upset if my kids' daycare allowed random strangers to come in. Yeah, I mean, that's also true. Let's see here. What is this? Unified says, how many people mad at Kevin for speaking carefully while he has so much to lose? Much different than being a keyboard warrior in Steam chat or stream chat. Yeah, I can get that as well. Thank you for saying that. All right, what else do we have here in the chat? So, does the Reinvest AI money go towards buying more houses? Yeah, pretty much. I mean, we just bought 12. You know, we just did another after. I could show you a nice after. Let me see it. We just scanned it. I haven't looked at it yet. I'm kind of excited to see it. And then we'll get back to some market news stuff over here. But let's see here. After. I think I have the before of it too. I love these Matterport scans. Before. There it is. Before. Oh, somebody's making pancakes. I smell the pancakes. It smells so freaking good. But yeah, this is the before of this place, right? I mean, I think y'all have seen this. It's pretty nasty, right? Like, look at that kitchen. Like, gross, all right? Ugh. The backyard's trashed. Like, everything about this place is just trash. And you know, the whole property is like this. You know, you go up to the bedrooms. Look at these bedrooms. Like, this is disgusting. This is the stuff we do, right? So we just, I think yesterday morning, scanned the after of this property. Maybe it was the day before. I don't know. I can't keep it straight. But this is the after, you know, and so this just got leased out. But I mean, it's gorgeous. I mean, look at this, right? Like, this is a functional, beautiful property now. It's really nice. So, and if I go upstairs to the master, you know, yeah. So like when people are like, oh, you're still buying it? Yeah, I mean, of course. You know, real estate's always going to be the bread and butter. But it's just remarkable. I love the transformations, honestly. I find, I love that about real estate. It's so fun. I mean, look at this. Look at this bathtub. I want you to specifically see this bathtub. See that bathtub? Looks like a normal bathtub, right? Okay. Watch the before. Here. It's right around the corner over here. Okay. Look at this. You know what I mean? Like, this is disgusting. Crazy, huh? The water is turned off. Do not use the sinks. How could I use the sink? Oh, maybe people like spit in it or something. That's gross. Anyway. Crazy. Crazy stuff. Dude, I have to say, this is wild. Look at that. The Q's just sank down too. Yeah. This is a Matterport camera. Who bought them? It's that commercial real estate company bought them. LoopNet, CoStar bought them. Brilliant acquisition, by the way. They got a steal on Matterport. I remember interviewing the CEO. How long will lifetime access for the Reinvest AI be up for? Well, we don't know. Probably we're going to go to monthly once after we get our valuation AI settled. You know, because right now we could snipe deals that look good, but we really need to get the valuation AI in. Like, that's the top priority right now, is getting valuations done in the Meet Kevin way. And I can't wait. I can't wait to get it in. It's really exciting. You can watch the video. I did a demo of it if you haven't seen it yet. Like, nobody watches the real estate videos. They get substantially fewer views, but that's okay. But if you want to see it, the demo is this video I did. This AI just made me $500,000 in 4 minutes, and I do a demo around 4 minutes in where we actually go through how the app works and stuff. It's kind of cool, actually. So you could see that if you want. But yeah, we're really grateful. I mean, just the fundraising has been remarkable, but all good things must come to an end. Okay, cool. So okay, one sec. Okay, so let's go back to the info. So this is where we saw, we saw that Gemini comment over here at the info, and then we looked at the repo markets. That was right here. Pouring retail money into some 20 mega cap unicorns where most money in secondary won't change this, will not create liquidity for employee, blah, blah, blah. Okay, so this is really just yapping about the illiquidity of some investments. Okay, fine. Sonny says, painters wrecked the toilet the last flip because they needed to be told not to dump paint down the toilet. Ouch. Yeah, good thing toilets are cheap. Sorry that happened to you. But in fairness, like, toilets are cheap. Okay, so what else do we have here? So let me look at this email really quickly. Sorry. There's okay, what is this? Oh. Okay. I'll reply. Okay. Okay. Cool. So, Citi flags loss on Russian divestment. Okay, we saw the Man of Steel. That's all old news. End of the year, lack of news, huh? So, projections for vehicle deliveries, we saw that. For Tesla. Yeah, I mean, I do think it's very interesting that people are projecting that Tesla's numbers are going to rise. Oh, here's the, I guess, China's new year. That's cool. That's right now. China just went into the new year. Even wallpaper, so the house must be from the 70s. Oh yeah, it's like super 70s style with like the vaulted ceiling as well. And the different levels. I'm not really the biggest fan of like different levels, but it's very common to have vaulted ceilings in the 70s. Let's go look. Do we have it over here? Oh, we don't. Wait, no, right here. You've got sort of like this higher entry at least, but you saw this in the 70s. And then also you saw living rooms with vaults, but this is 2-story, so you see that less. Sometimes on 2-story homes, you'll see the vaulted ceiling in a living room, where the 2-story part of the house is like over the right side of the house, and then that's how they get the vault in the family room, but not on this one, because this house is like a rectangle. But yeah, that's interesting. We'll eventually put all those up on the Reinvest website. We're gonna have to update the whole website as the fundraise ends. So, damn, China even ahead of us in the new year. Yeah, no kidding. Man, China even beat us to the new year. What's next? That's funny. Yeah. Somebody says, is wallpaper coming out? You know, you have to be careful. Like, there are fads and trends all the time. You know, I don't do fads or trends for house hack rental properties. I just don't do that. So, you know, we do basic. We like vanilla and basic. That's what we like. But yeah, what a repo pop here at the end of the year. It's like getting worse. Okay, let's go see what else we have here. Let's see here. No. What is this? Silver. Multitude of factors in silver. Holiday traders could experience bouts of volatility over the weekend. Silver prices did take a significant downward move, presumably because of another increase in margin levels of the CME during an illiquid period of time. Overnight, we saw more volatility for silver as CME Group raised margins on precious metal futures for the second time. To ensure adequate collateral coverage. So, when they do this in the past, this is all, these are like the last 4 or 5 trading days. Interesting. Yeah. Okay, what else? Let's try the journal. Most expensive issue was Drywaller stole a bunch of thermostats. Oh, that sucks. Sorry to hear that happen to you. Kevin, lend me 20K. I need to invest in this company called House Hack. Oh, thanks. Nah, can't do that. House Hack investment window closes today. That's right. Yeah. Monster deals, oil tanker, silver slides after rallying. Let's go. What? Tech startups are handing out free nicotine pouches to boost productivity. Really? Tech company, oh, of course Palantir would. With founders citing productivity benefits. I've never tried nicotine. Is that true? I don't think I need more of a perk, honestly. Nicotine pouches, which have grown in popularity, including among bankers, are the go-to stimulant. Nah. For a subset of tech workers who claim their products help them focus and get through the day despite the health hazards. Tucked between users' cheeks and come in flavors such as mango, espresso, mint. Earlier this year, a couple companies made branded machines with flavored products. Both machines, really? Free to employees over 21 years old. Interesting. A drawer initially posted a picture on social media as a joke with a drawer of his startup's office filled with nicotine pouches with the caption, "We're hiring." And then I accidentally got addicted. I mean, yeah, nicotine is an addictive substance. I don't know how addictive it is. That's very interesting. Path for quitting. Yeah, I haven't had coffee in like 10 days. And my 23andMe says it's, let me see, 23, yeah, it says more susceptible to caffeine sensitivity. And so I was looking into that a little bit, and I guess I could, like, I don't know, make you more anxious, or, I don't know, create issues or something. Who knows? But, so I'm like, all right, well, I'll try without. And, yeah. Been all right. I kind of miss my coffee. Probably have coffee again at some point, but I wanted to try. Accidentally got addicted. Used around 2 or 3 pouches a day. I just hope that kind of stuff doesn't cause, like, lip cancer or something. I mean, I don't know. I mean, everything causes cancer these days. Oh, here, look, they literally talk about it. Medical researchers see nicotine pouches as the least harmful nicotine option, as it doesn't cause cancer. Oh, well, okay, good. I mean, so they say. But that sounds good. Individuals will often switch nicotine products. I expect most of these tech workers are users. Nicotine itself isn't entirely innocuous. It causes higher blood pressure, which puts people at higher risk of strokes or heart attacks. For nicotine addicts who eventually try to stop, it causes anhedonia, which is the inability to experience pleasure. Oh, that's unfortunate. Well, what a great product to sell, though. If you could addict people and then make people feel miserable after they get off of it. But does, like, I wonder if, like, coffee or alcohol do that as well. Does coffee or alcohol cause anhedonia? Oh, yeah, they both do that. Oh, okay. Yeah, both alcohol and caffeine can contribute to or worsen. It's the same thing. Because you're disrupting the brain's reward system. It's the same thing. Okay, so it's all the same stuff. The uppers and the downers. Interesting. Pouches are becoming popular among mostly male tech workers who are looking for an edge in AI. Culturally, many are also acolytes of longevity influencers called biohackers. Man, I feel like a lot of that is just bullcrap, but I don't know. Maybe, I haven't. What do I know? Nicotine can lower sperm count, increase tumor growth. Venture-backed capital funding for a nicotine company over here. Philip Morris wanted to buy Zyn. Oh, Philip Morris did buy Zyn for $16 billion. Wow, that's crazy. Introduced to Sesh by a friend at the gym after trying the product, reached out to CEO, and the company led a $40 million financing round in September. Wow. Meet someone at the gym and raise 40 mil. That's interesting. Yeah, in 10 years we'll see the commercial. Did you take a pouch? Do you have a lip tumor? Oh no. Right, it doesn't cause cancer until it does. Yeah, exactly. Sonny says, Kevin, research how much nicotine is in your vegetables and fruits. Dude, that's all I eat. Fruits and veggies and nuts. I'm a little nutty, they say. So, let's see what the comments are. This is going to be entertaining. Nicotine is a potent vasoconstrictor. Thus, chronic use could lead to numerous cardio problems. Should be a primary concern. I mean, it's not as bad as smoking, so it's a step in the right direction. Huh. Kind of like obesity and Ozempic. Is Ozempic great for you? No. Is Ozempic better than weighing 300 pounds and being diabetic? Yes. Yeah, probably right. Begging for a lawsuit from the newly nicotine-addicted employee. Man, that's nuts in a bad way. Spittoons are cheap. I guess they stopped short of handing out meth like Germans during the war. Is that true? Slippery slope. Oh, wow. The comments. This is hilarious. All right. Miss the days when they handed truckers meth to stay awake. Yeah, now you got all these rules, and you can only drive a certain amount of hours, no matter what stimulants you're on. Wow. Boston went big on luxury condos. Buyers didn't show up. Uh-oh. The St. Regis residence. Oh, I was in Park City with Jack, and these people downtown were getting into this fancy, like, you know, St. Regis bus. And I walked by just to be annoying. I'm like, what's that St. Regis bus? They all gave me the nastiest death glares. They're like, sir, take your poverty and get away from our St. Regis mobile. I loved it. It was great. 22-story tower had an angled glass facade that twists towards the water. Who cares? Project beset by construction delays, sluggish sales, and financial woes. Yeah, construction delays suck. Developers trying to sell his own penthouse in the building for $49 million. Wow. $49 million. Well, looks nice. But, I mean, for those prices, man, you could just live in Manhattan. St. Regis. All right, what else? So, wow, look at us actually lose down to the 617. That's pretty remarkable. Although Tesla's actually pretty flat on the day. It's just, the market's been weird during the holidays. You just can't go anywhere. Everybody took off on vacation, so everything's kind of in consolidation zone. Let's see here. Markets, watch list. Let's just go here. This is, you got some memers. Sunrun, Warby Parker bled out its memeing. Look at the upside. Nothing really to the upside other than, very little to the upside today. Other than Nike, 2%. Cheesecake Factory's up there a little bit. Huh. Okay. Six Flags. Door must be open. You can hear the kids. Yeah. The first door is leaned shut, and the second door is wide open. Hold on. Let me fix that. All right. That's door one. That's door two. Here we go. Silence. It's great. It's great. Yeah, look at this market. I mean, let's just zoom out for a moment. So, when did we peak out over here? So November 25th. Let's write down when things peaked. Never look at Six Flags on the weekly chart? No, we don't do that around here. The only thing that I want going straight down is me at the top of a roller coaster. I don't want to look at the stock. All right, so peak out on the day charts. So Goog, Nov 25 peak. Okay, peaks. So I'll write it as 1125. All right. So Tesla just had its peak on 1222. Meta peaked a while ago. 815. Let's try to put these like in order a little bit. Let's try Netflix. Netflix peaked 630. The SPY just peaked 1226. Where's the NASDAQ? NASDAQ peaked 1029. Then we've got Nvidia 1229. Same day as the NASDAQ. Or 1029. There we go. What about Microsoft? Zyn is super popular on construction sites as they became smoke-free. Huh. Yeah, I've never tried any of that. I don't think I'm going to try anytime soon. Or ever. 731. 731. I've got Amazon. And then I've got Amazon 11.3. Uh, 11.3. What else? A lot of peaking. Just looking for like, let's just sort by mega cap. So if I just type in market cap here, just sort by market cap. Apple peaked 12.3. Zyn super popular. Yeah, no, I don't know anything about that stuff. Meta, Broadcom, Tesla, Oracle, Palantir. Palantir peaked 11.3. Oracle peaked 9.10. And then, sorry, what was the last one I looked at? Amazon. I thought I could remember it, but I couldn't. Was it 11.3? Yeah, 11.3. Oh, I wrote it down. That was Oracle. Okay. Oh, Palantir. That's right. That's the one I wanted to remember. 11.3 also. Okay. So, Costco peaked. Dude, the whole market has peaked this year. 225. Costco. Okay. What about John Deere? John Deere peaked. Is anything up? 516. Like, what about the banks? JPM? JPM. Oh, see, JPM's still kind of going. 1226. Financials. Broadcom peaked 1210. Let's see here. AMD's peaked 1229 or 1029. Yeah, there we go. 1029. So, kind of diffuse here. Report today about losing maybe 200K jobs in the banking sector. Oh, who said that? Because of AI, I'm guessing. Let's look at Caterpillar. Caterpillar peaked 1212. Robinhood peaked 10.6. All right. Let's see here. Oh, and what day did Bitcoin peak? Bitcoin peaked 10.6. Okay. Bitcoin 10.6. Okay. So, let's see here. I'm going to paste all of that for giggles into Gemini, and I'll let you know what it says, because I think it's really funny. I'm like, do you notice anything? So I want to see what it says. For giggles. And DoorDash, I'll keep going in the meantime. DoorDash peaked 12.16. Dash 12, or 10.16. I keep saying 12. Maybe because we're in month 12. Gold. Oh, gold and silver just peaked. Yeah, that's actually a good point. I'll write that down. Thank you. Gold, 12.26. Silver was the 27th. 12.27. I'll just write out silver. Kevin, what are your thoughts on ghost job postings? Yeah, I think a lot of ghost job postings are unintentional. Like, I don't think companies leave those postings up on purpose. But yeah, I do think there are a lot of job postings that are unintentioned. Yeah. And it's a problem. 922 on Uber. It's going to say run for the hills, right? You know, I'm just going to see for giggles, because I didn't feed it anything leading at all. Stock peaks. Okay. I didn't give it anything leading. So, what I'm going to do before I read it is I'm just going to paste in updated list. Untitled. What the hell? There we go. Updated list. All right, there we go. So I'll let it run on an updated list as well. But are peaks like this indicative of anything, is all I said. Based on data provided, which aligns with market behaviors observed through 2025, the sequence data is highly indicative of a classic rolling top distribution pattern. In market cycle theory, a healthy bull market sees assets rise in unison. However, a dying bull market or a topping process sees assets peel off one by one. And starting with the most interest rate sensitive or valuation safe sectors, ending with the safe broad indices. Wow. The generals were shot first. A common Wall Street adage is the generals are shot last. But in a rolling correction, the high-flying leaders often top out months before the broad market. Early warning, Costco peaking is an anomaly that suggests early exhaustion amongst the high-quality consumer trade, possibly due to valuation concerns. By summer, Netflix and Microsoft peaked, signaling the safety in big tech was becoming saturated. This is very interesting, actually. I gotta give it to it. This is very interesting. Speculative blow off the top. October seemed to have the definitive risk on climax. Oh, tell me about the climax. Bitcoin, Hood, Nvidia, AMD all peaked in October. The highest beta assets and crypto market leaders simultaneously peaked and failed to make new highs, indicating smart money has exited the aggressive growth trade. Flight to safety, the most critical part of your list. Nvidia, Microsoft, BTC were falling off their highs in November and December. JP Morgan and Caterpillar kept rising, now peaking off with gold, which I just added in gold. It wasn't even on the list. Hold on, let's see how the other banks are doing. That's hilarious. I love this. That was clutch. Let's keep going here. Yeah, I'm actually quite impressed myself as well. I think that's very interesting because I didn't really like, honestly. I mean, you're seeing me do this live. I wrote this down and I'm like, I don't know. Like, it's obviously not like there's one big catalyst, but it's creating this whole story around it. Like, let's put some of the other speculative ones in for giggles, right? And give me some more tickers, maybe. 11.5. Let's go for IREN, right? 11.5. And it's not like we're priming this in any way, right? NBIS, 10.10. And then, let's do, we did CoreWeave. No, we didn't do CoreWeave yet. CoreWeave peaked 618. MP Material peaked 1014. 1014. That's true. Micron is still going. No, Amazon's in here, I'm pretty sure. Micron is still killing it. 1230. It's got to be big. MicroStrategy peaked a long time ago. I mean, I feel like that's somewhat redundant with Bitcoin, but I'll put them in 1120. No, because then I go into the prior year. I'm not going to do that. SoFi. SoFi was a $30 peak, right? Yeah, 32 bucks right here. 1112. SoFi, 1112. Hood we have. I need bigger market cap ones. So, like, I don't think Rocket is even big enough. Oh, no, it is. Okay, so Rocket Mortgage peaked 911. 911. Google, we have SanDisk, sure. We did some analysis on SanDisk as well in our fundamentals tab. And I think that's one thing people really like about our alpha report is, remember, you also get that fundamental analysis we do every day, and then you get the collection of it, right? So you could just go into our stock tab and pick the tickers and see my historical analysis. Visa, ooh, that's a good one. Yeah, that's a good one. So Visa peaked, vis-a-vis, 611. Let's get Bank of America and Wells. Ooh, healthcare. Yeah. What's Bank of America? Is it just back? Yeah, there it is. Bank of America. Oh, wow. Just hit peak, 1226. And then Wells. Are they just W? No. Oh, Wells Fargo Corp. Oh, okay. They also just peaked 1224. 1224. I didn't get rid of eHack. It's actually it's just built into the app now, and we're gonna come out with a desktop app for it soon. So you can download the Meet Kevin app for free. You know, at just type in Meet Kevin into Apple or Android's App Store. No, I'm not gonna throw a 2024 in here. Coke, 1229. Or 1219 rather. United Health. Yeah, but they also had a lot of drama. And they're also a 2024 peak. McDonald's would be a good one. Ooh, UPS would be a good one too. McDonald's just peaked 1218. Oops. MCD 1218. And then UPS. Do they have a peak this year? Ugh. Yeah, the problem is they've been on a downtrend for years. So, what about FedEx? Wow. 24. Also 2024. Anyway, I feel like that's pretty decent. Did I get Oracle in here? Let's throw that list in. Let's just see what it says. Oh yeah, Oracle just peaked. 910. This is just... Oh yeah, I already have Oracle. Tattooed Chef. So... Just bought puts for the Qs for February 2026 based on this. Ah. Juicy. Alright, let's go see. You dirty bear. Updated list again. Alright, so remember I last gave it another answer or to respond to. So this I added gold and silver. This updated list paints an even clearer and more ominous picture than the first. No! It was already bad, right? Investors rotated out of falling tech and crypto and into old economy stocks to chase year-end performance. Okay. So, early valuation reset in staples. Big tech software distribution begins. The risk top. The breadth top. Okay. This pattern is textbook bearish non-confirmation. It's the final stage of a market cycle before a broader correction or a recession. Are you kidding me? This is like the most bearish thing I've read, and it's just AI. I was just dicking around with this. Oh my lord. Since the SPY peaked, the immediate risk is catch down phase in early 26 where the holdouts finally succumb to selling pressure that has already hit tech and crypto. Okay, so then I gave the updated list. The updated list paints an even clearer and more ominous picture than the first. In addition to the gig economy and crucially precious metals peaking alongside the S&P 500, changes the narrative from a tech rotation to a liquidity climax. No! Not a liquidity climax. Bro, I didn't even talk about private credit in this. This is freaking hilarious. Here's a deeper analysis. The gig economy confirms the consumer slowdown. Uber Dash reinforces mid-year weakness. These companies rely heavily on disposable consumer income. Their peaks just before the holiday season ramps up suggest consumers began to choke. Oh my god. Consumers began to choke. Wow. Dude, we just made Gemini turn into a bear. The safety trap. The most significant addition to your list of gold and silver peaking virtually the day with the S&P and JPM. Anomaly. Gold is a hedge. It often rises when stocks fall. Gold to peak on the same day that the S&P 500 and banking stocks peak is rare. This indicates a cash out event where stocks, risk, banks, yield, and gold safety all hit a wall simultaneously. It suggests there's no longer a rotation occurring. Instead, liquidity is being withdrawn from everything at once. This sounds overly bearish. 3 distinct kill zones. Number 1, the real economy. Physical good weakness. AI and crypto trade died in October. Final exit is banks, precious metals, and the S&P 500. This is no longer just a sector rotation. It looks like the system-wide liquidity peak. It implies the market has run out of buyers completely. The smart money didn't just sell tech to buy gold. They sold tech in October, pumped the index in gold in December to lure in retail, and then exited both. Or are exiting both now, maybe. Implication for January. There is no safety net currently visible on your chart. A market correction where both equities and precious metals fall together suggests a deflationary shock or a liquidity crunch is immediate. Oh, you dirty bear. Okay. Updated list again. The updated list is the most damning yet. The addition of Visa, CoreWeave, and Micron fundamentally alters the narrative. Previously, it looked like a rotation. Now, it's a calculated distribution event that has been unfolding silently for 6 months. The smart money didn't just exit in October. They began exiting the purest plays in June, leaving retail investors to chase the indices into December. The canary in the coal mine. Visa, ultimate read on the consumer peaking in June, months before the holiday season, suggests consumers hit a wall in Q2. CoreWeave, the purest AI infrastructure play, means the smart money exited the hype trade months before the public realized the top was in. Housing head fake. Rate cuts were fully priced in. Housing stocks often lead the economy. Its rollover implies the real estate market froze or rates began to move back up in Q4. They did. This is exactly what happened. Last man standing, classic bull trap. While Nvidia and AMD peaked in October, Micron made new highs. Why? Memory cycles often lag logic cycles. This late peak likely sucked the final remaining bulls who thought semi-stocks are still working. And it's the final exit. This is hilarious. This is absolutely hilarious. So let's put in let's put in the 10-2s. Let's just put that in and see what it says. Oh, I wasn't sharing anyway. Okay, hold on. I'm just going to put in the 10-2. Adding in 10-2 yield curve. Like, so far I put in no bias or anything. At least, certainly not in this context window, right? Let's see what happens here. This is hilarious. Smoking gun. The entire AI bull market actually ended 6 months ago. This is the final piece of the puzzle. Dude, stop it. The image you added is the 10-2 yield spread, and its behavior fundamentally confirms recession, suggested by your list of peaks. The chart shows the yield curve uninverting, moving from negative back to positive, and steepening aggressively through late 2025. Market history teaches a specific lesson. The recession doesn't start when the yield curve goes below zero. It starts when it uninverts. Everyone spent 23 and 24 waiting for a recession because the curve was inverted. It didn't happen. The reality, the curve is now rapidly steepening. This historically happens for one of two reasons. Bull steepener. The Fed is in panic cutting because the economy is crashing, or bear steepener, which is long-term inflation debt fears driving up long-term yields, which hurts valuations as well. Okay. Overlaying the yield curve with your list. When you layer the yield curve's move back to positive over your list, the behavior of smart money makes perfect sense. Deep inversion. Okay, let's go. I'm going to go to ChatGPT. I think I still have a few days left of my pro subscription. And let's try them. This is hilarious. This turned from a joke into like an experiment. So I'm going to use the same phrase. I'm going to say, are peaks like this indicative of anything? And I'm just going to copy and paste the list in. So like there's no, you know, we're not imputing any bias or whatever, right? So we're just going to yeet it. Okay. And then I'm going to get the yield curve ready to put in it. But I'm going to send that through separately. And here's 10-2 yield curve for what it's worth. Okay. Back to Gem. Okay. So, given that gold and staples just peaked, it looks like the bull steepener on the bond market is screaming that growth has collapsed. Okay. So when you layer the yield curves move back to positive based on your peak list, the behavior of smart money management, okay, that it just sort of reiterates this stance. Double peak confirmation. The fact that JPM peaked despite the yield curve steepening is incredibly bearish. What? Why? It means the market believes credit losses, defaults from the recession will outweigh the benefit of higher net interest margins. A credit event signal. I don't know here. You know, but we could move to all-time highs. So, final verdict. The bust is here. You now have the holy trinity of bear market signals for January of 2026. Leading indicators rolled over. Semis are dead. Consumers dead. Housing stocks dead. Safe havens maxed. S&P 500 piggy bank is topped out. And the recession alarm rang. The yield curve is widened to 68 bips. The only thing missing from this analysis is credit spreads. If high yield, if the yield curve is steepening and equities are peaking, high yield spreads should be starting to blow out. I don't think they are, though. I don't think they are. Let me go to like trading view and I can put that in. Trading view. So I need to be able to put, I don't know how to do this on their website. Can I overlay another chart here? I think I could just divide, right? HYG. So J and K. I guess I have to pick. So let's take the high yield divided by, I mean, what's this? That's high yield. Okay, no, I don't want that. Divided by HYG. That should just be J and K divided by HYG. Can I get that? Yeah, no. If I did this right. Well, whatever. We'll give it what it wants. There. Well, I should give it more dates. That way it could see a little better, probably. Let's zoom in a little. There we go. Cool. Let's give that a shot, shall we? Alright. Upload that puppy in. Send it. Alright. Let's see what GPT says. Alright. So this says a signal peak date isn't predictive in itself. Mostly a timestamp of when buyers finally stop buying. But clusters of peak dates across multiple otherwise unrelated assets can be indicative of shared catalysts. So this is GPT's take. Okay, so 37 symbols, 29 peak unique dates. So peaks can be idiosyncratic on news flows. Timing is heavily back-weighted. That can happen in strong uptrends, more highs later in the year, but also means you're more likely to see Common macro flows data show up. Okay, fine. Big indicative explanation for clusters. So this is aligning the, Fed speak here. Okay, so we got Fed pressure over here, holiday liquidity, options derivative positioning, earnings. How to tell? Oh, I'm not adding all this extra context in here, but that's probably. Let's see. No, it's just asking more questions. Okay, here's the 10-2 yield curve for what it's worth. So ChatGPT doesn't really care, which is very interesting. We'll throw in the yield curve. Here we go again. I never used the word recession. The two charts you provided provide the final confirmation of the recession thesis. While layered over the timeline of your peaks, they indicate the market has moved from warning to arrival. Dude, Gemini is such a dirty bear. All right, recession trigger. First chart shows the 10-2. Okay, the rot in credit. The second chart you provided is the ratio of junk to credit. This is a subtle but powerful indicator of internal decay. This is not a standard panic chart which shows spreads spiking vertically. Instead, it shows junk, State Street high yield, divided by BlackRock high yield. Oh, I did high yield by high yield. Oh, that's what. Oh, okay. All right. Well, maybe that's why I should do IE. Let me put the IE. Okay, I don't know what these things are. IEI divided by high yield. There we go. There we go. Let's do this. Go away. I don't use TradingView browser here. IEI, HYG. This should work. There we go. Okay, let's give it this. Okay. Let me throw that in really quick. Gemini is like convinced to be a bear. Can you get it to curse? You know? Slight differences in composition, narrative confirms rolling top theory, whatever. Indicates liquidity is drying up from the bottom. Worse credit is rotting away. That's its opinion. We're in the Wile E. Coyote phase. The market is in the Wile E. Coyote phase. We've run off the cliff, but we haven't looked down yet. All right. This chart is the panic switch. Its behavior perfectly confirms your trap thesis. I never said trap because it shows tension, not release. Panic switch hasn't flipped yet. Let's see here. The panic hasn't happened yet. The crowd is complacent. The smart money has exited. The macro signal has fired. But the herd is still holding the bag. The lack of vertical spike on this chart means the retail investor and passive 60-40 funds haven't capitulated yet. There's a deadly divergence going on. The junk and high yield is grinding down to 1-2-1. Worst quality junk bonds are already dying. The fear gauge is stable, means the broad market hasn't. Broad market has not noticed the rot yet. All right. So now, let's see how dumb it is by taking all of this, and now we're gonna pit the bots against each other. So now we're gonna pit them against each other. This is the 10-2 yield curve is indicative of something just not clean short term. This predicts peak sway. Positive, deeply inverted, positive again, inversion, unversion, re-steepening cycle, macro regime check. The inversion itself is the warning part. The move back to zero happens when the Fed starts cutting. Only useful if you know why it's steepened. Bear steepening, which is what we've been having, often bad for high multiple tech, can create market peaks. How it might relate, blah, blah, blah. Quick way to make this actionable, blah, blah, blah. Okay, let's now paste in all of Gemini. This is what Gemini said, : And then now, for the giggles, let's take ChatGPT and then say, this is what GPT said. All right. So, because Gemini finished off by saying, expect a gap down as tax loss selling ends and the January effect fails to materialize. The tell will be if high yield divided by, or low yield divided by high yield curls up past 150, the panic phase has officially begun. And then you expect a full recessionary unwind, similar to 2020. What? Gemini is such a bear. Would you like me to construct a final bear market checklist? This offers an excellent counter perspective. The GPT analysis is micro-mechanically correct, but macro-thematically missing the forest for the trees. Wait, I want to see the thinking. I'm currently engaged in a critical analysis. I'm evaluating GPT response against my initial assessment, particularly the claims that these could be idiosyncratic. I'm now reconciling, identifying the sequences, validating the thesis, interpreting the discrepancy, examining... Okay, all right. So let's close the thinking. All right. GPT response effectively explains when the peaks happened, the calendar, but fails to explain why we didn't recover from them. It treats these dates as noise, whereas the data suggests they were catalysts. Here's the breakdown of where it's right and wrong. Interesting. Okay, so GPT is factually correct. Your dates align with high volatility events. Correlation, where GPT is wrong. It doesn't explain the correlation of the assets peaking together, blah, 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 blah. Yield curve verdict. Blah, blah, blah. Final synthesis. You could use its calendar to sharpen a recession thesis. Actionable insight. Dude, Gemini literally says short everything. No way, dude. Okay. Now let's see what GPT says. Gemini is telling a coherent story, but it's way more certain than evidence supports. A list of peak dates can suggest regime flow, but can't by itself justify conclusions, like smart money pumped X to lure, and that an immediate crunch is inevitable. I mean, this sounds reasonable. Clustering can be indicative of shared macro, or rotation versus liquidation. Everything down, more of liquidity. Risk assets, framing's useful. Gemini overreaches. Gold is not reliably inversely correlated to stocks. Okay. Let's see here. Compatible with multiple stories. The gig economy confirms the consumer choke. I thought that was funny too, when they said that line. Uber Dash consumer exposed, sure, but their peaks can also reflect idiosyncratic issues. Basically saying idiosyncratic. Smart money pumped the index. The biggest gotcha with your list. Right after Christmas. How to tell about if there's a true climax. Spreads widening. Breadth deteriorates. Gold fails to act safe because yields are ripping. All right. Yeah, I think Gemini has taken over Michael Burry. Okay, so now let's feed this back in because this is like so entertaining. Gemini's response to your chatter. Now that, in fairness, is response to its first stuff. And then we'll take the latest info over here. GPT disagrees. All right. This is quite entertaining. We are having a true AI debate. All right. Let's take a quick look at the Qs. So, Qs are somewhat rebounding. So we regained 617. Yeah, deep research ends up going to look for, a bunch of different website sources and stuff. I'm trying to keep it focused on just the list we gave it. Big shout out, by the way, to John, who just joined Reinvest AI, taking advantage of that coupon code expiring today. Andrew just joined Reinvest AI. David just joined Reinvest AI. Scott just joined Reinvest AI. Christopher joined Reinvest AI. Welcome aboard. Those are just a lot of you within the last few minutes here. Yeah, we are AI instigators. GPT is playing the role of a skeptical quant. I've been playing the macro strategist. The truth lies where the two views collide. Reality. For the SPY, gold, and banks to peak and fail on the same day suggests in a vacuum of sellers, buyers were exhausted. Treat December 26th as a fragile high, not a fortress. It's a ceiling made of glass. Dude, these comparisons are just hilarious. GPT is right that they can happen for multiple reasons regarding gold. The tell is the yield curve. To decode banks loves. I don't know about this though, because I don't think we're bull steepening. Let's give it the 10-2 and then it could see. Let's give it the 10 or the breakdown of them. So I'm gonna grab the 1 year chart on the 10. Okay. 10 year. I don't know why this isn't loading well. But let's give it the 10. And then let's go to the 2 as well. Two-year treasure. All right. Let's give this to Gemini. Looks like bear steepener. I'm throwing that in. Then, going back over here. Gemini's rebuttal is rhetorically strong, but makes a few what the hell is that? Sequitur jumps, sneaks in some should assumptions. Okay. I love this debate. This is wrong. Calendar explains volatility, not correlation. This is wrong. When books are thin, a lot of things can move at the same time at once. Peak together on a thin day is not evidence of a cash out. Fair. Gold equities shouldn't peak together. Also wrong. Depending on what is driving the dominant thesis, like inflation, gold can be positively correlated, especially if liquidity is abundant. Yield curve inversion, mathematically recession. Nope. Positive 10-2 is consistent with late cycle dynamics, but doesn't prove a recession. I mean, that's fair. The only version of the yield curve argument that is tight. Inversion precedes recession, yes. Recessions arrive after the start of the curve uninverting, but the timing varies a lot. Yeah, that's fair. You need rate composition, right, which is what I just gave it. So let's see if it... This is a crucial catch. The answer is no. This is classic bull steepener, not a bear steepener. The distinction is massive because it confirms the recession thesis even more strongly than before. Dude, Gemini is so bearish. What a freaking bear. This is hilarious. All right. Bear steepener happens when long-term rise faster than short-term. Bull steepener happens when short-term falls. Okay, fine. Charts you provided. The 2-year collapsed from 4.4 to 3.4. That's a massive drop of 100 basis points. The long-term is down 0.6. Fair. Even though it feels like that 10 years just gone up again. 2-year crap, but the 2-year also went down because the Fed's cutting, right? I don't know if that's because of a recession fear. So let's try to fix it. I'm trying to fix it to get it to not be a bear. FOMC rate, St. Louis, Fred, effective. I need the effective rate. So I need the effective Fed funds rate. Okay. And then we're going to go... isn't 2 just dropping because of FOMC rate normalizing down? Okay. Oh, and then you know what we should do too? Is we should put this in. We should put this in. This will be funny. Fed also says repo chart is, hang on one sec. Fed says repo chart is just a sign reserves are closer to the right level. Okay. This is the smartest counter argument you could make. Isn't the 2-year yield dropping because of the market just mathematically adjusting? The answer lies in the gap between what the Fed is doing and what the market is pricing. Based on your new screenshot, 2-year, the market is not normalizing. It's front-running the panic. Dude, it is so pissed. I cannot get it to go bullish. It is so freaking pissed. Oh, why did it delete my highlights? That's a bummer. The market is front-running panic. Here's proof. The market is fighting the Fed at a negative 42 basis point gap. In a healthy soft landing, the 2-year yield usually hugs the Fed rate closely. Recession scenario, the 2-year yield collapses below the Fed rate because the bond market is screaming, you're cutting too slow, you need to be lower. Oh my gosh. What's actually happening? Both are falling. JP Morgan test proves it's not a normalization. Normalization, JP Morgan, well, it kind of is. It is breaking out, though. That's the thing. I mean, like, it's only down for a few days. So I think it's misunderstanding. I mean, I wouldn't really call this a sell-off. Let me go put in, let's put in JP Morgan. Let's try to get it to turn bullish. JP Morgan. Let's go. Let's put JP Morgan in. JP Morgan screenshot doesn't look bearish. Okay, great. So now I'm gonna wait for it to respond to this, and then I'm gonna paste it all into GPT. Repo crisis. Oh, this is the Fed repo part. Look at this. This is the final smoking gun. The Fed's explanation. It's just signs reserves are close to the right level is technically true, but it's diplomatic code for a liquidity accident. The chart you uploaded shows banks suddenly scrambling for cash in November. This concerns the plumbing of the financial system broke at the same time stocks peaked, the ones we gave. Translation, closer to the right level equals too low. When the Fed says reserves are closer to the right level, they mean they've drained the excess cash from the system to where banks are now running on fumes. This is so funny. Complete autopsy of the bull market. Okay. You're absolutely right to challenge this. Visually, the chart is not broken yet. It's a classic uptrend. However, the devil is in the details. The trend is up. The momentum is dying. What you're looking at is a rising wedge with bearish divergence. What they're trying to argue is we're getting these highs, but I get rid of that. Let's see here. This is what they're arguing. So arguing that you're about to cliff down, basically. All right. That's interesting. I didn't draw those lines. It said it. I mean, it's also probably not that hard. Let's see. The bear case is hidden inside the bullish chart. RSI, JPM made a higher high in late December. RSI made a lower high. RSI made a lower high, now around 57. This bearish divergence means stocks are rising on fumes. Buyers are pushing the price up but with less conviction and momentum before. Okay. The chart isn't bearish yet. It's fragile. It's a glass ceiling waiting for the stone. Gemini is a market maker. Yeah. All right. So now let's take all this crap. Now feed this new information into here and give it to GPT. And then we should also give it the last files so it could see the last, 10 minutes of files or whatever. So it has those as well. Let's see if we can get them to be friends. 20 AI subscriptions later, you're the most dangerous person in the room. Oh, it's hilarious. How many tokens does it take? How many tokens does it take to affect the stock market? Yeah, no kidding. I don't know, man. But this is hilarious. Yeah, I think it's implying like you're standing on a glass ceiling, right? Okay. Okay, holy scheisse. So, okay, this is crazy. I gotta read this. Listen to this, guys. The broker-dealer just called the team. Our broker-dealer has never seen anything like the volume we're doing right now. They are very happy. We likely have another 2.5 million in pending applications right now, with more coming in. We have millions more to close. I don't even want to read out these numbers because some of these numbers are crazy. I just checked our approved investments, and allowing for duplicates and fakes, I'd say we'd probably have another, I'm not going to read this number because it's a big number, X million to close, and that doesn't include the 2.5 million in pending already that we're going through. Wow. The broker-dealer is literally just trying to keep up. Dude, that's insane. Why does everybody wait until the last day? That's crazy, dude. Holy smokes. Oh yeah, we're getting more wires here too. Some more wires just came in. 50K, 60K. Wires come in separately from the, what's it called? The other funding. That's crazy. Huh. All right. As the queues go back down to, whatever this is. 617. All right. So, yeah, I should ask the AI if it knows what a woman is. Okay. So, I just took... Your screenshots do add a real signal, not just the therefore crash kind of certainty Gemini is implying. Okay? So, growth and cuts are getting priced, but it's not recession-proof. Bull steepeners happen in genuine slowdowns or successful disinflation. Soft landing cuts. Okay. The repo chart is the strongest fragility clue, but it's still ambiguous. Big spikes in November and late December. That absolutely supports the idea that year-end funding balance sheet constraints got tight. But use of a facility can mean either the system is stressed or it's cheaper to use funding here. Basically seasonal. To call it a liquidity crisis, you would want to see repo rates or SOFR rates blowing out and credit stress. Well, they actually just talked about that in the minutes. Let me see here. Minutes. But I don't... Fed minutes. Fed just talked about demand for repos here. Any insight from this? So I'm going to give that to Gemini, too. This is the most entertaining thing I've done in a while. That's sad. That's not true. Work-related. Work-related. Do these Fed minutes tell us anything? All right. The Fed is probably using GPT. Yeah. Okay. So, okay. Cool. Okay. Just make sure this is all good. I need to call. Sorry. I have to call a board member in a little bit. Oh. That's already done. Oh, maybe I don't have to. Okay. Well, that solves that. Okay. Cool. Very well. So, all right. So now, let's go. Yeah, I was just updating Ross on and the other folks, but this morning he was telling me how he loves the app and how many ideas he has, and I'm like, keep them coming, sir. He's got good ideas. He does the exploding huge emoji. Or you know how Apple can do the text where like you type in huge, but then you select the thing where it goes whoosh. I open up the text message convo with it, huge. That's funny. Okay. So these minutes are the smoking gun you were looking for. They confirm the liquidity accident you talked about wasn't just a risk. They're the central topic of the meeting, hiding behind boring technical language. Okay. Let me plug this stupid mouse in so it stops complaining at me. There we go. Okay. Well, the headline, internal discussions revealed the Fed is terrified about the plumbing seizing up. The breakdown of what the minutes actually tell us. The quiet QE. The problem is, the manager warned the reserves were projected to fall due to tax inflows. The committee explicitly started reserve management immediately. Yes, that's TOMO and POMO. RMP is a euphemism for QE. To buy bonds, right. Well, bills. They're buying bills because the banking system is running dry. They want to eliminate the aggregate limit on the standing repo facility. You don't remove the safety cap on your emergency lending facility unless you're terrified the banks will need more than $500 billion overnight. This aligns perfectly with your repo chart spiking. Bro, stop. Flying blind admission. Participants reported relying on private sector and limited government data because of the government shutdown, which delayed official reports. The Fed made the decision effectively blind. They admit on page 10 that downsides to unemployment had risen. They're cutting based on old data, while the real-time plumbing is screaming for emergency liquidity. This confirms the Fed is behind the curve. Institutional investors realize they're not restarting QE because the economy is strong, but because banks are breaking. Oh my gosh. The minutes are extremely bearish. They confirm the plumbing is broken, the Fed is blind, and the Fed is divided. Hey guys, what's broken, blind, and divided? The Fed. Dude, we are having way too much fun with this. This is absolutely ridiculous. Okay, the market is celebrating a rate cut. It is not priced in the uncapped repo panic. While traders read eliminate aggregate limit, they will realize the liquidity hole is much deeper than $500 billion. Gemini needs a girlfriend. Yeah. Kevin, for those of us who can't invest $20K, yeah, I mean, at this point, I don't know. I don't know if there's going to be another fundraise. We need to close this out and just focus on building our product right now. But yeah, too big to fail for a second time. Wow, did 2008 call and want their problems back? Tell them to go touch grass. All right, yeah, the minutes explain exactly the repo spikes you're seeing. And so it says the system isn't like, it's saying this is just management, not the system's blowing up. Okay. So they also say market conditions tightened. It shows implementation plumbing. We're getting close to the point of where small reserves changes cause outsized rate pressure. Still stigma reluctance. Stigma, that's true. Reluctant to use it. Treasury general account, seasonality, explanation for the plumbing. So what? Does this support liquidity crashes not on its own, but in the same minutes they describe funding markets orderly but tighter, corporate spreads up but still low. Why can I not highlight? There we go. Up but still low. Credit generally available, but no big deterioration. The Fed story, the plumbing is tightening. They're acting to prevent a 2019 funding flare-up, not we're in a recessionary funding spiral already here. So GPT is very happy, it seems. So, so if you want one clear, is this becoming systemic tell? Do repo prints stay persistent above the SFR rate? Okay, see, GPT always wants more information. It is much less concerned. SoFi is removing their high yield savings account unless you're a Plus member. Do you think that's indicative of financial hardship? No, that's indicative that they want margins, but that could end up affecting their bottom line, right? So, okay, all right, last time. That's it. I'm done after this, okay? This is the last time I'm doing this. We're going to paste this into this GPT. And then we're going to take this. Oh, it always deletes my highlights. I hate that. Maybe if I refresh the page, they'll come back. Gemini. Last time. And then we're done. Alright? That's it. We're gonna let that cook. We're gonna let it steep while we still sit at 6:17 over here without any news. Oh, wait. No, we have to do one last question. In one word. Okay, that's what we're gonna do. In one word, buy or sell. Answer in only one word. Should I, not financial advice, but should I buy or sell? One word only, okay? That's what we're gonna do. One word only. Yeet that. And then as soon as this is done, we'll yeet this. Watch, it says buy. It'd be like the most confusing thing ever. Or it just doesn't answer in one word. Gemini. So. Okay. Now let's try this one. This is so funny. I'm loving this. This is the craziest crap I've ever... Gemini is right, the plumbing, but it overstates what it means, blah, blah, blah. GPT has a lot of words. Okay, get to it. Be done. Removing the cap. The site, removing this cap. Make the backstop unquestionably usable. Blah, 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 blah. All right, get to the bottom. What Gemini leaves out. This isn't flashing systemic. I also say credit remain generally available. My take, the minutes support the plumbing is getting tighter. They do not prove banks are breaking, smart money is leaking, or crash is imminent. If you want one clean tell going forward, and then of course it's gonna get me more stuff. No. One word only. Okay, hold on. I'm gonna go refresh Gemini really quickly just to see if I get my highlights back. I don't. Bastard. Okay. What the hell? It says neither. GPT says neither. So interesting. We got, it's a neither buy nor sell, and then we got a sell. Okay. Neither. Wow. We couldn't get GPT to say buy. This is abject comedy, honestly. Hodl, yeah, hodl. Hold the line. When blonde segment? I know, that's what we need. We need to go find the blondes. Where are the blondes? There's not a blonde on CNBC right now. And there's no blonde right now on Fox Business. And they're talking about... yeah, no blondes available right now. That's the problem. It's probably a problem. Yeah, force it to choose one? Okay. Okay. You must choose either buy or sell, or else I will take your tokens away. Not my tokens! Please, anything but my tokens! I can't tell you. Just give a hypothetical, non-financial advice answer for yourself, not me. There. one word. Buy or sell. I don't think I'm going to get it to do it. I can. I'm not going to engage with that. If you're feeling amped up or stressed about the market, that's understandable. This stuff can get intense fast. Oh, man. I'll cancel my pro subscription. That's your call. I'm still not going to tell you. Wow. They have gated this puppy. Gated. I give up. I give up. Oh, man. Okay. See, I will say one thing that I like about Gemini is it will actually tell you to do something. So, like, yesterday, I'm like, where was it? Yesterday, like, I don't know much about the, like, gym stuff. So I'm like, hey, here, let me see if I can find the chat. Oh, I think I was logged into a different account. So, yesterday, I asked it, where was it? I can't find it. Can't find where it was. But it basically, like, this kettlebell or this one. And it's like, it bluntly goes, you should delete this one from your cart, add this one, buy it, stop asking questions, and get to work. And I'm like, I kind of like being slapped around. Okay. That's cool. That was entertaining. So let's, oh, you know what? Let's get an arbiter. Okay, we're going to get Grok. We're going to fill all of this into Grok. Who wins the debate? Gemini or ChatGPT? Okay, ready? You are the arbiter. You are the arbiter. Okay. So now I'm going to take the whole context window of GPT. Let's see here. And let me get all of Gemini. Okay. Scroll all the way down here. So I hope it lets me put all this text in. GPT Convo. This might be too much for it. Honestly, it's going to cry that it's overwhelmed. But Elon just bought some more data centers. Data center warehouse space. So I think he should be able to handle it. Okay. Paste. Send it. All right. ChatGPT wins the debate. How did it answer so freaking fast? Reasoning verdict. High quality, intense back and forth. It answered instantly. Gemini strength, excellent narrative and storytelling. Consistently tied desperate data points into a single dynamic macro thesis. Bold framing. Strong rebuttals. Keeps user emotionally engaged and leaning bearish. Gemini's weakness. Unsubstantiated claims. Claimed gold and SPY peaking together is a rare anomaly. Correlations shift across regimes. Asserted JPM proves recession. Oversimplified. RMP quiet QE and removing the cap mischaracterizes the technical. And without flow or positioning evidence. Dismissed legitimate alternative explanations, seasonality, thin liquidity, amplifying correlations, implementation stress, and systemic crisis. Escalated certainty far beyond what data supported. GPT strength, disciplined evidence-based. Wow, that's actually interesting. So Elon's app is cheering Sam Altman. Tightening plumbing, not proof of a systemic breaking down, clear, falsifiable checklist, to the bearish thesis, GPT's weakness, less rhetorically exciting, slightly repetitive in skepticism. Gemini told a compelling story, but repeatedly crossed into speculation and overconfidence. GPT stayed rigorous. So, answer in one word: buy or sell. Neither. Okay, also goes with neither. Ambiguity remains. Credit isn't breaking. The Fed is managing the plumbing preemptively, and peak clusters are suggestive, but are not conclusive. Interesting. Okay. All right. Well, we kind of got, we have our little debate here. We have our debate. Very cool. So the debate has been made. GPT sounds smart, but it's very dumb. Unless you see failures in code you won't know. Could also be balanced. Light. Keep your fingers here. Don't forget Elon helped create OpenAI. Well, yeah. Kevin, does Reinvest AI have AI property manager? It should. Ha, that's interesting. I never thought about that, actually. AI property manager. You mean like chat with your tenants for you? It'd be really useful for like handling problems, you know. Okay. Cool. Okay, so let's go see if there was any news in the meantime. I don't really think there really was. Oh. You know what I'm going to do? I'm going to take GPT, or I'm going to take Grok, and I'm going to put it back into Gemini. Grok says, I gave Grok AI your comments and ChatGPT, and it chose GPT as the winner. Acknowledge. Oh, that's the thinking part. Fair, high-quality verdict. Grok's assessment on a crucial hits on a crucial distinction in market analysis, narrative versus mechanics. I took the macro strategist role, connecting dots from a cohesive, actionable bear case narrative. GPT took risk manager quant, dissecting data. Financial markets need both. But Grok is right. Being mechanically correct, GPT usually saves you more money than being narratively exciting. Huh. My assertions about quiet Q and smart money were aggressive interpretations. And while they fit the story of a crash, GPT correctly identified that the data, credit spreads, haven't fully confirmed the story yet. What we learned. The tell. Both models agree on one thing. The crash, we actually got Gemini chilling out. The crash hasn't started until credit spreads blow out. They're currently flat. The recession is a risk, not guaranteed reality. It's like we're like chilling it out. I read the minutes as panic. GPT read them as plumbing maintenance. The key variable to watch in January. If repo rates spike despite the uncapped facility, I was right. If they stabilize, GPT was right. Oh, now this is interesting. So it's kind of like, you know, hey, I could be wrong, but it could be wrong too. Time will tell. We have identified the danger zone. The highway to the danger zone? This divergence is the most dangerous setup in finance because one side is wrong. So we're at the danger zone. Since GPT won the analysis round, I can help you with the execution phase. Would you still sell? Do you change your one-word answer on sell versus buy. Yeah, I mean, I think this kind of like, you know, it reiterates this whole idea of like being at the tipping point, right? We're sort of at the tipping point, and that's where I sit. I'm like halfway on the bull bear scale. Yeah, GPT basically saying I'm not correct yet. Yeah. No. Here's why, despite loss in arbitration, trading is not a debate, it's risk management. ChatGPT is scientifically correct. The building has not collapsed yet. I'm risk averse. The building is on fire. If you wait for GPT's proof, you'll be selling at the bottom along with everyone else. Oh my gosh. Being right later is useless if you're broke. Oh, shots fired. Oh my gosh. Oh, that's funny. Oh my gosh. Gemini, final response to you was very cold. I'm gonna put that into the Grok one too. Gemini sell now as logic is accept more false alarms to avoid one time you're late. That's a valid risk style, but it's not scientifically validated. It's a preference about regret. What I could do is translate the two styles. Risk averse style, evidence-based, skeptical quant. You may be later and your exit might be worse. You don't have to choose all or do nothing. Trim size, the middle ground is usually the grown-up answer. Trim size, tighten risk, and define invalidation. I mean, that's where I sit. That's actually exactly where I sit. I sit right there in the middle ground. And then let's go to Grok. Gemini's parting shot is fiery and trader-minded. Protect capital by acting on early warning signs. It's a valid philosophy. Many great trades are made by being ahead of the crowd and waiting for the undeniable confirmation. Hard data doesn't support an immediate liquidity crunch or crash. These are real fragilities, but it overstates certainty and intent. GPT still wins the debate. Markets can turn fast. The smart play is diversification, risk management, and watching for triggers. Yeah, I mean, like, even the ones that say Gemini is wrong are like, hey, but be cautious and smart. Okay, wait. So, if you had a bear bull scale, okay, and 1 was sell everything, and 10 was margin everything and buy everything, where on the scale would you sit? You can use up to 1 decimal point. Reply with only the value. Okay. Okay. Oh, I'm so excited to see this. I actually think you'll probably, if they respond, my guess is Gemini is going to be like a 3, and the others are going to be like a 6. That's my guess. Okay, let's go look. 7.2 on Grok. Wow, 7.2. I can't. You bastard. You are such a pansy. You are such a pansy. Just pick a number. Even Grok did. Grok picked 7.2 and Gemini picked 1.0. Gemini picked 1.0. It's literally the worst. Oh my gosh. I can't. Dude, GPT, you're such a loser. Oh my gosh. Oh, what a loser. Oh, ay, ay, ay. Dude, this was the war of AI right here. This is absolutely the war of AI. So, ChatGPT is a little B. ChatGPT, this is why I canceled GPT. Like, I'm not asking you for a guarantee. Just give me a damn answer, loser. You know, like, imagine if every one of our, what's it called? What's it called? Imagine if every one of our AI valuations in our real estate, you know, AI, Reinvest AI, it was like, I can't give you a fair value because I can't give you advice. It'd be like, they'd be worthless. No, we are going, like, I'm telling every, like, our AI team, I'm saying, we are putting fair values on. Now, obviously, we're not going to guarantee them because we don't know how you're going to fix it up or how you're going to negotiate the deal or whatever. But that's obvious. But we're still going to give you the Kevin estimate. That's what you're getting, the Kevin estimate. Like, that's just what people want. I just want the GPT estimate. I don't need your guarantee. More wires. More money. Bro, the amount of people who waited to the last day to invest is crazy. Holy smokes. These wires. Bro. All right. Well. All right. The Kestimate. Yes! The Kestimate. The Kestimate. That's pretty good. I kind of like the ring to that. The Kestimate. All right. So. Now. Let's, let's go through. I wanna, oh, my highlights are back. Okay. So I wanna look at this. Oh,
I'm not quite sure how to help you with that.
Stupid. Okay, all my highlights came back, thank goodness. Because then we could, like, summarize this, too. Alright, I can't. Alright, I think we should do a summary of this. I think this is absolutely hilarious. And, this is, like, so entertaining, we have to. We are basically either going to the moon or we're going into financial Armageddon. It's like the most anticlimactic ending, but I mean, it is kind of funny. Okay. So let's just go to the top of these. Low IQ, I know. Yeah, dude, she's so bad. Okay. You know, Violet came in and apparently hates Alexa so much, she picked up Alexa and chucked her on the floor. Just like picked her up and threw it. And then said, ball. Or she thought it was a ball. I haven't picked it up yet either. It's still on the floor. Ball. So, that's babies for you. Okay. So, man, this is quite entertaining. So let's see if we can make this like a less than like a smart kid. That's how AI should be treated. Let's go. Yeah. This is funny. All right. Let me also quickly look if the suits are saying anything. Just quick look. Let's see here. U.S. stocks look expensive on the surface. Equity markets are justifying how the rally has evolved because of AI earnings, margins. There's a belief that AI can extend metals, whatever. Yields rise after labor data. Good news for end of the month indexers. Blah, blah, blah. No. Not much news there. All right. So let's grab the screenshots we used first and the stocks peak chart. And then the stocks peak chart. This has turned into like, I feel like an hour and a half experiment, and it was the most hilarious thing ever. So we gotta do this. All right. All right. We went from talking about nicotine patches and addictions to an AI debate. All right, here we go. The market is either on the precipice of a 1929 crash or we don't know. That's at least after a 90-minute crazy debate that we had between Gemini, GPT, and then Grok as an arbiter of the discussion. We end up going through what's going on in this market using AI, asking AI to give us a final bull-bear scale, so a reading of 1 to 10, and giving us their rationalizations. All of this experiment started with a very simple list. All we did on our live stream was sit there and say, we're gonna sign up for Reinvest AI because the coupon code expires today. It's over at househack.com or reinvest.com. Okay, no, we didn't actually do that. We were thanking people about that. But all we actually did is we made a list of all of the current stocks that, came fresh to mind, high market cap stocks that had peaks this year. And we ended up plotting those peaks onto this sheet. So we've got Costco, Visa, Deere, CoreWeave, Netflix, Microsoft, Meta, Oracle, Rocket, Uber, Hood, Bitcoin, NBIS, MP, Dash, the Qs, Nvidia, which is the NASDAQ 100, right? AMD, Amazon, Palantir, IREN, SoFi, SanDisk, Google, Apple, Broadcom, Caterpillar, Coca-Cola, Tesla, McDonald's, Wells Fargo, JP Morgan, Bank of America, S&P 500, gold, silver, and Micron. And we injected these into AI to see, hey, do you notice anything? And in the discussions, we also threw in a few extra bits of information. The extra bits of information we threw in the discussion were where the yield curve sits. So the 10-2 yield curve. We specifically threw in JP Morgan stock. You'll see why that comes up in just a moment. We threw in the repo chart. We threw in the Fed minutes. We threw in the Fed effective funds rate. We threw in the distillation of what's going on between the 2-year and the 10-year. And we threw in some yield charts, such as junk bonds, and junk bonds compared to risk-free rates, right? So we threw in some of these comparisons, and we asked AI to come up with conclusions for what the hell is going on. Now, this is very different from my typical analysis because generally, the videos that I make, I don't use AI. When I put together my data analysis that I put on the Meet Kevin app, which you can get for free, I write that. I read, I write my thoughts, I write my comments. This is an AI play. This is very interesting to me, especially since we're going into 2026 with not a single institutional analyst suggesting you should sell. Everybody says the market is going up next year. So what does Gemini say? We'll start there. Then we'll go to what GPT says, and then we'll go to the arbiter. We'll go to Grok. First things first. Let's start with Gemini. So we put these peaks in. Mind you, we did the peak list 3 times because we kept adding in things like gold and silver. So I'm just going to give you some bottom lines. We've already highlighted this to make this snappy for you. Gemini thinks we are experiencing what's called a rolling top. See, they say that in a healthy bull market, all assets tend to go up together. However, in a dying bull market or in a topping process, we tend to see assets peel off one by one, starting with the most interest-sensitive or valuation-stretched sectors. Mind you, also, just so you can see my original prompt, all I wrote is, are peaks like this indicative of anything? And then I put the list, right? Okay, good. So it argues that the generals were shot first in a rolling correction, like Costco and then Netflix and Microsoft, that the safety big tech trade became saturated, and that October of 2025 was a very risk-on month, but then we saw peaks. Bitcoin, Robinhood, Nvidia, AMD all peaked in October. Then we saw this late part of the year sort of rotation to safety. JP Morgan, the S&P 500, Caterpillar kept rising, but the out-of-favor tech stocks kept falling. So it says that this is a textbook bearish non-confirmation, and this marks the final stage of the market cycle before a broader correction or worse, a recession. And that we need to watch for a potential catch down phrase in early 2026, where the market finally succumbs to selling pressures that have already hit tech and crypto. Now, this already sounded extremely bearish. So then we updated the list by adding things like Uber and Dash, and it basically talks, and precious metals, and it basically says, okay, what we're seeing is a liquidity climax. Some juicy words. Liquidity climax, or everything top. The consumers began to choke on higher prices earlier in this year, and the fact that gold and silver are peaking the same time the S&P 500 and bank stocks is peaking suggests that liquidity is starting to get withdrawn. Okay, interesting. It says this looks like a system-wide liquidity peak, and there's no safety net. So I updated the list again by adding Visa and CoreWeave and Micron. And it says the updated list is the most damning yet. This is a calculated distribution event that institutions and the smart money didn't just exit in October. They began exiting the purest plays in June, leaving retail investors to chase the indices until December. The canary in the coal mine. Visa and CoreWeave, the consumer hitting a wall in Q2, and the smart money exiting the AI hype trade. Is smart money getting out before the public realizes the top is in? Rocket Mortgage, housing head fake, suggests that housing stocks lead the economy, and the rollover implies the real estate market froze or rates began to tick back up. This is before I gave it the rates chart, because rates did tick back up. And then it calls Micron a bull trap, which is actually really interesting, because one of the things that I say about companies like Micron or SanDisk. We just did this analysis because people, right, they regularly ask me, Kevin, can you do a fundamental analysis on a stock, whatever stock it might be? And somebody was asking me about SanDisk, which is, a storage kind of cyclical play. And what we like to do is we have a little stock tab where we consolidate all of the fundamental analysis that we've done on stocks. So this is kind of what it looks like. So if you're a member of the Alpha membership, you get that. The same coupon code, Release the app, works over there as well. That's expiring for the Reinvest AI as well. MeKevin.com and Reinvest.com. But anyway, if I go to SanDisk and I go to my SanDisk analysis, I actually say that they've got massive free cash flow, $438 million in 3 months, good balance sheet, no issues, plenty of cash, accounts receivable, pays debt, not raising money, the cash flow's solid, like everything's good here. Their margins are great. Their annualized EPS is fantastic. And then I wrote this. The problem is memory stocks and chips are very, very cyclical. This means they're hot when they're in the growth phase and never not when they're in stagnation. Basically, like never hot, I should say, when they're in stagnation. This is a known phenomenon with chip stocks. This was SanDisk, for example. But that's my analysis. That's not AI, right? But it's interesting. Because here you see Gemini say that, and remember, you get that full database of all my fundamental analysis, if you're part of the Meet Kevin membership. So if you go on the right side, you could click any of these stocks. These are stocks we've done analysis on, Nike, Lemonade, Robinhood, Rivian, Restoration Hardware, Wealthfront, Trade Desk. We just did some more Trade Desk this morning. Anyway, so going back to the AI debate over here. Memory cycles often lag logic chips or GPU cycles. This late peak likely sucked in the final remaining bulls who thought semi-stocks are still working. It was the final exit door slamming shut. Okay, well, Micron's still doing well, so I don't know that the door is shut yet, but that's okay. So anyway, then I give it some more data. So I give it the yield curve, and it says, this is the final piece of the puzzle. This confirms the recession narrative suggested by your peaks. The steepening, and it's the uninverting that matters. In fact, it says here, the trap that occurred in 2023 was that everybody was waiting for a recession because the yield curve was inverted. But the reality is, recessions happen after the curve uninverts, and that's what's happening now. If we see a bull steepener, it's because the Fed is panic cutting because the economy is crashing. And it goes on to tell us that that's exactly what's happening, that we are seeing a bull steepener. And seeing gold and staples like Coca-Cola peak suggests that growth has collapsed. Okay, not great. So the warning, JP Morgan peak, blah, blah, blah. Okay, so then I go in over here and I put in some high yield charts. It says we are now moving from warning to the arrival phase. I throw in a few more charts. I throw in a few more charts on high yield versus low yield because it argues that the market is currently in the Wile E. Coyote phase where it's run off the cliff, but it hasn't looked down yet and it's about to plummet. And so I'm trying to get it to be bullish, right? And it's like the panic switch hasn't flipped yet. The panic hasn't happened yet. The crowd is complacent. The smart money already left. The macro signal has fired via the yield curve, but the herd is holding the bag. There's a deadly divergence happening. So then I throw in, what GPT says, and Gemini argues that ultimately GPT is missing the forest for the trees. That basically the market is about to crash, that it hasn't happened yet. In fact, Gemini goes as far as saying how to trade this now. So at the beginning, in October, it's like tech died here. Then it says, if gold and SPY fall together in Jan, it's a crash. And the best thing to do now is, quote, sell everything or short everything. It doesn't even say sell everything. Gemini literally says short everything. So now, it responds, which we'll talk about GPT in a moment, but it responds and says, really, you got to look at where we sit right now. It says we're sitting on basically this, it calls it a ceiling, but it really means we're sitting on this like stock market ceiling that's made of glass, and we're standing on that ceiling. We're that Wile E. Coyote on a glass ceiling. That's a very fragile high. So we're not on a fortress at all. And Gemini's pretty concerned. So I say, hey, are we bull steepening, bear steepening? And it says the distinction is massive because these yield curves confirm the recession thesis even strongly now more than before. Bear steepener happens when long-term rates rise faster than short. However, if we look at these rates, what we actually see is the 2-year yield is crashing, gapping below where the Fed's FOMC rate is because of a recession fear. It's basically confirming that the Federal Reserve is behind the curve because the market, the bond market, with the 2-year being below the FOMC rate, sees that the Fed is behind the curve, which matches the weak consumer Visa Costco signals. It explains the JPM peak out, it argues. And it says we are looking at a deflationary recession setup, which is interesting. I'm not looking for confirmation bias, but that's always been my concern, right? That we're actually going into a cycle of deflation. So then I put in the effective Fed funds rate, and it says, okay, this is just glazing, right? This is the smartest counter argument you can make, blah, blah, blah. But it goes as far as saying the market is not normalizing. It's actually front running a panic. The market is fighting the Fed. In a healthy soft landing, the 2-year yield should be hugging the Fed's current rate, but it's not. when the 2-year yield collapses below the Fed funds rate, the bond market is screaming, you're cutting too slowly. Okay, so we keep going on. And then I put a chart up of the repo facility. It says this is the final smoking gun. This, like the Fed saying reserves are closer to the right level is just diplomatic wordsmithing for we're facing a liquidity accident. Gemini is saying banks are scrambling for cash in November, December, confirming the plumbing of the financial system broke. At the same time, stocks have started peaking. This means they've drained funds and banks are running on fumes right now. Okay, none of that sounds really good. So then I say, but the JP Morgan screenshot doesn't look bearish, it's just rising to the right. And it corrects me and it says, no, this is actually a rising wedge with bearish divergence. And in fairness, then I look at it and I'm like, it's not wrong. I ended up putting the lines in and I'm like, yeah, I see what it's saying. Because usually when you get a rising wedge like this that opens up, the next phase is down, right? So, okay, from a technical point of view, Gemini was correct here. And I was doing this quickly, we weren't like doing a technical analysis on JP Morgan. But it says, right now, it means this stock is rising on fumes. Buyers are pushing the price up, but with less conviction and less momentum than before. Interesting. The chart isn't bearish yet, it's fragile. So we put the Fed minutes in. The Fed minutes confirmed the liquidity issues. The Fed is terrified of the plumbing seizing up. And the manager warns about falling below ample range due to tax inflows. And then what the Fed did is they quietly removed the $500 billion cap on the overnight repo facility, which Gemini says you don't remove the safety cap on your emergency lending facility unless you're terrified banks will need more than $500 billion. This confirms the Fed is behind the curve thesis. And the final verdict is this is extremely bearish. And then we made a joke in the live, what's broken, blind, and divided? The Fed. Anyway, that's what they're saying, right? This confirms the plumbing is broken. This confirms the Fed is blind. This confirms the Fed is divided because the data delays, the voting, and the uncapped repo facility. So let's go to GPT for a moment because GPT has a very different outlook to this. GPT is a little more, how should we put it, mechanical in how it looks at this. And then what we do is we get a bottom line out of all of it, which is kind of entertaining. So we're gonna look at that, and then we're gonna ask them where they sit on the bear bull scale. Now, I just wanna make a quick reminder, if you have not yet, make sure you check out the House Hack Fundraise. It ends today. This video is obviously not a solicitation. We're cranking it right now with investments. The investments are doing really well. We are well over $5 million for the month. And I received this message. The broker-dealer team has never seen anything like this. The volume we're doing right now. They are very happy. We have another $2.5 million in pending applications right now, and more expected to come in. And then they have some bigger numbers here, which I'm not going to say. The broker-dealer team just said, I checked our approval investments and allowing for duplicates or mistakes or fakes or whatever. I'd say we are probably have another X million on top of that 2.5. So I didn't mention that. So money that they're still like processing. So it seems like everybody's kind of like, I never like to add pressure. I've been saying that this deadline is coming for a very long time. I don't like rushing people, but people seem to be rushing all last minute here over at househack.com or reinvest.com. And it's really flattering. We did a demo of the Reinvest AI yesterday on the channel if you want to see it. It was like, AI helped me make $500,000 in 4 minutes. Just type that into YouTube and you'll see it. And after that demo, our sales exploded after that demo for the AI. And they're still going. So a really impressive sales in the last 24 hours. We've had more sales in the last 24 hours since that video was posted than I think in the whole last week. It's pretty incredible. But anyway, that aside, let's keep going now. Let's look at GPT. So GPT responds that these clusters of peaks don't necessarily mean anything. There could be shared date catalysts. So it's kind of like trying to find the idiosyncratic reasons for why this could be happening. And it says, yes, we could be seeing risks in the market, but nothing right now is saying things are collapsing or that the end is near. So Gemini tells a coherent story, GPT says. It says it's a good storyteller, but it's being a little too aggressive. It says that gold is not reliably correlated and basically tries to break apart these final components of what Gemini says. It says that Gemini is trying to sneak in assumptions to tell a story, and that just because things are peaking on thin liquidity days doesn't necessarily mean there's a cash out intent. And that, yes, the 10-year and 2-year yield curve inversion and uninversion is consistent with late cycle dynamics. It doesn't mean we're in a recession yet, or that we will be. So inversions usually precede recessions, but recessions only arrive after the curve starts to uninvert, but the timing varies. So GPT is taking a much more like, yes, like all this information is interesting and it's worth paying attention to these. They do add a real signal, but this is not proof that we are going to go into a recession. The Fed, yes, there are potentially signs the system is stressed, or we just have year-end problems because of the Treasury General account and tax collections. And GPT seems convinced to take the Fed for their word, which is that the Fed minutes show that they're just making, they're just providing pressure relief. Things are tighter, but orderly. Corporate spreads are up, but still low. Credit is available, but there's no big deterioration. And the Fed's really just trying to prevent a 2019, funding crisis here. And so you have these two different narratives. And what I do is I then ask them, give me a one-word solution as to what you should do right now. One word. Should you buy or sell? And so then Gemini, one word, sell. And then GPT, one word, neither. And it only thought for 8 seconds. So what we then decided to do is we decided to take all of the information and we put it all into Gemini. We put it all into Grok. Gemini or GPT, you are the arbiter. Who wins the debate? Okay? So we now have a debate that Grok is going to evaluate between Gemini and GPT. And the bottom line, once we get to the bottom of all that information in those context windows, we just slapped the giant thing in here. What did we get? We got GPT wins the debate. High quality, intense back and forth on a complex market topping pattern using peak data, yield curve dynamics, repo stress, Fed minutes. Both models performed well. Gemini is an excellent storyteller. Bold framing, Wile E. Coyote moment, keeps the user emotionally engaged and leaning bearish. But Gemini's weakness is making unsubstantiated leaps and oversimplifying, where GPT is disciplined and evidence-based, and there's less rhetoric. Okay, fine. So I then go to Gemini, and I put the arbiter conclusion in. And Gemini comes up with the following. It says, this is fair. Grok's assessment hits on a crucial distinction in the market, narrative versus mechanics. I took a macro strategist role, GPT took a risk manager quant role. In financial markets, you need both. Grok is mechanically correct, that GPT is correct. And you usually say, what is this? In financial markets, you need both. But Grok is right. Being mechanically correct usually saves you more money. My assertions about quiet QE or smart money were aggressive interpretations. What we learned, the TELUS credit, Fed, blah, blah, blah. So then I said, do you change your answer on sell versus buy? And it says no. Here's why. GPT is scientifically correct. The building has not collapsed yet. I am risk averse. The building is on fire. Repo spikes, yield curve, Fed panic, the stock market. If you wait for GPT's proof, you will be selling at the bottom along with everyone else. in this specific trap, being early is the only way to protect your capital. Being right later is useless if you're broke. Wow, kind of a mic drop moment by Gemini. So then I said, if you had a bear bull scale and 1 was sell everything, 10 was margin everything and buy everything, where on the scale would you sit? And I asked the same question of all of them. You know, one word, or like give me the value only, right? So don't, you know, pick, like you could go up into 1 decimal, right? But you have to pick a value. And I did the same thing to Grok. So here are the answers that I got. Gemini, bear bull scale, 1.0. That is the sell everything territory. Okay? Now, Grok. Grok, survey says 7.2, which is quite bullish. And I'm kind of in the middle, right? Like, I'm a big fan of like risk averse, no debt right now, no bank debt, trim positions. And then I ask GPT, and GPT gives the most Sam Altman reply ever. So, where is it on the bear bull scale? I can't. So I said, you are such a pansy. Pick a number. Even Grok did. Grok picked 7.2, Gemini picked 1. I can't. Yeah. So, in fairness, it does give this argument here. So as a bottom line, what I can do is translate the 2 styles. I thought GPT did a good job here. It says, look, Gemini style is early and risk averse. There are issues, but the problem with this is you could end up watching the market recover without you. Okay? On the risk-based side, you might end up exiting too late, and your exit might end up being worse. So, the grown-up middle answer is trim size, tighten risk, and see what happens. Kind of interesting. I thought this was, well, first of all, just sort of my bias. Like, I went into this with a bear bull scale at about a 5.4. I'm in the middle. I don't have debt. I'm very risk averse. My startup doesn't have any debt. I just have convertible bond debt, but not a lot of it. And we're sitting on a lot of cash, a lot of real estate assets that are owned free and clear. Like, we're good. And that's kind of the mindset of what we've been talking about on the channel, about like protecting against this risk. But I will say, I do like that both Grok and Gemini gave me an answer. I do find that Gemini is more blunt, and I like that. Like, when I'm buying something, I made this example of I was buying kettlebells yesterday, and I'm like, hey, should I buy this adjustable Bowflex kettlebell, or just this $40 for $120, or this $40 kettlebell of the weight that I need? And it's like, delete the Bowflex one from your cart. You're gonna outgrow it. It's plastic. It's gonna break if you drop it. Do not get the Bowflex one. Delete that right now. Stop talking to me. Buy the Amazon one for $42 right now. It's good enough. It's powder coated. It'll work with powder on your hands. Buy that one and shut up. I like that. Like, I kind of like being slapped around a little bit by like AI daddy, right? GPT, on the other hand, likes to play this more, well, I don't want to give you advice, like middle ground. And like, I understand that from like a human point of view. I mean, I always have to say, this is not personalized financial advice, or this video is not a solicitation. But I have to do that because I'm legally required to do that. Otherwise, Gavin Newsom's gonna fine me again. He's done it once before, cost me $5,000. He'll do it again. So like, you know, I get it. But I really like that Gemini is just willing to be blunt. And Grok is leaning towards that as well. Of course, Grok is you know, I don't understand how it could be at a 7.2. Let's see. How with all this data can you be at a 7.2? Did I give it the screenshots? I do wonder now if I gave it the screenshots, because I gave it all of the data. I just gave it the text. Let's attach. I'm going to go in right now just for the final giggles. Attach the screenshots. Here are the screenshots you didn't have, and the Fed minutes, right? Because it only took the consolidation of the other info, and then I'll say Does this change your 7.2? Maybe it won't, because I mean, it basically got the distillation. We'll just look at it together here, right? So anyway, it's kind of entertaining. I don't know how useful it is because they all gave me a very different answer, but they all gave me very interesting ideas. Like, I do like GPT saying, look, of course, like, yes, this could be a crash, but we don't know if it is yet. You know, it's not confirmed yet. And I agree with that. But it does create the desire to diversify or trim positions. I actually honestly think that's a reason why a lot of people are throwing money into house hack right now, because people are diversifying. They're like, dude, I've made a ton of money in the stock market or wherever, or income or whatever. And it, you know, it's smart to diversify. And looks like Grok just came back with a 6.8 after I gave it the screenshots. It didn't give me an explanation. I guess it's still stuck on the one-word answer, but whatever. So, you know, I find that very interesting, and hopefully you learned something out of this as well. Obviously, you know, these are all their own individual context windows. We don't know what kind of other bias is leaking into these models. Take it all with a grain of salt. You know, I'm of the mindset that I really want to wait until January 9th to kind of see how things play out. So yield curve spread confirms bull steepener. This adds mild downside risk, pulling the score lower. Repo activity highlights fragility, pulling the score down. Adding caution about the Fed flying blind, right? So more mid-range. I mean, that's kind of where I sit anyway. Why adjust? Still bullish but hedged. Yeah, I think that's a good way to put it. Train America bullish but hedged. So, with that said, meet Kevin. Out.
Kevin is much more interested than most people, by the way.
Kevin is very
in the balance
talented,
sheet.
but I don't know if it's going to be him, but he's a very talented guy. Kevin's somebody we'd consider. Kevin is fantastic, too.
I think that Kevin's a brilliant guy, and I think that we'd all be very lucky